name's Jessica Hague and I'm a private client solicitor at Harrison Solicitors. The budget was announced on the 30th of October and there are some changes which are relevant when looking at estate and inheritance tax planning. First of all, in relation to inheritance tax, the thresholds have been frozen until the 5th of April 2030. The thresholds are the nil rate band allowance of £325,000 and the residence nil rate band allowance, which is available if you are leaving your main residence to your direct descendants, of £175,000. The first key change is in relation to pension funds and comes into effect from the 6th of April 2027. From that date, pension funds will form part of the person's estate. Pension administrators will be required to report directly to HMRC on any unused pension funds or death benefits and pay any tax due directly to HMRC. The second main change is in relation to agricultural property relief and business property relief, and this comes into effect from the 6th of April 2026. The 100% rate of relief for business property and agricultural property will only apply to the first £1 million of agricultural or business property. For business and agricultural property exceeding this, the rate of relief is limited to 50%. The other main change is in relation to capital gains tax and came into effect from the 30th of October 2024. The rate now for capital gains within the unused basic rate band is 18%. And for the gains falling into the higher rate band or for higher rate taxpayers, the rate is 24%. The 24% rate also applies to trustees and personal representatives of an estate. Overall, the changes could have been a lot worse, but having said that, if you are a person with a large pension fund, a business owner or a farmer, we would advise that you take up-to-date tax advice from a specialist, which is something we'd be happy to help you with.